Building long-term wealth. Most people think it's this exclusive VIP club reserved for lottery winners or tech billionaires. But in this explainer, we're going to completely demystify the whole shebang. You don't need luck, and you absolutely don't need a massive six-figure salary. You just need a blueprint. We're going to break down exactly how anyone, yes, anyone, can build a solid financial foundation right from the ground up.
But just imagine this for a second. What if you woke up tomorrow morning, checked your accounts, and found out your money had actually made more money while you were fast asleep? Sounds like pure magic, right? Well, it's not. It's really just the fundamental mechanics of finance.
Okay, let's dive into this. Every single day, millions of us wake up, commute, and trade our time for dollars. We work for money. But a strategic group of people have completely flipped the script. They've actually trained their money to work for them. And honestly, the only real difference between these two groups is just knowing the rules of the game.
And that's exactly what we're covering today. Here's our roadmap. Number 1, making money work. Number 2, the hidden threat of inflation. 3, investing in compound growth. 4, rules for smart investing. And finally, mistakes to avoid. Let's get right into it.
Section 1. Making money work, or as I like to think of it, treating your dollars like employees.
To truly grasp this, you need a mindset shift. Stop seeing your money as just a static number on a screen and start treating every single dollar you earn like a hardworking employee. Finance is really just the art of managing that workforce wisely. If you spend your whole paycheck on impulse buys the second it hits your account, you're essentially letting your employees clock out and go home as soon as they show up. Nobody is left behind to actually build your financial house.
Now, what's really interesting about this is how mastering these 5 foundational habits leads straight to long-term stability. You have to earn regularly, spend wisely, save consistently, invest for the future, and protect it all with an emergency fund. If you can train your dollars to execute these 5 basic tasks, you're setting up a financial foundation that is basically unbreakable.
Section 2. The hidden threat of inflation and why saving alone just isn't enough.
Because if you stop at just saving, you're actually in trouble. There is a literal invisible enemy working against your money every single day, and it's called inflation. It's the economic force that causes prices to rise over time, slowly eating away at your purchasing power. If your money doesn't grow faster than inflation, your employees are essentially taking a pay cut every single year.
And this brilliantly illustrates the brutal math behind it. Let's say inflation is at 5%, meaning a $100 item today is going to cost $105 next year. If your cash is sitting in a standard savings account earning a measly 2%, your $100 only grows to $102. When you go to buy that item, you're short $3. To put that into perspective, saving alone is mathematically making you poorer over time.
Section 3. Investing in compound growth, the absolute engine of wealth.
So how do we fight back? Investing. Investing is simply deploying your money into assets that have the potential to grow in value. Instead of sitting idle, your employees are out there working around the clock, earning returns. Whether that's in stocks, real estate, bonds, or ETFs. Actually, scratch that. The specific asset doesn't even matter as much right now as the habit itself. You're giving your money the chance to earn returns, keeping in mind that higher potential returns usually come with higher risk.
So the crucial point is this mantra. Saving protects your money, investing grows your money. You absolutely need both, for sure, but they have completely different jobs. Saving is your defensive shield for short-term emergencies. Investing is your offensive engine for building decades of future wealth.
And the high-octane fuel for that offensive engine? Compound growth. This is arguably the most powerful mathematical concept in all of investing. It's a snowball effect where your initial investment earns returns, and then, here's the absolute magic of it, those returns begin earning returns of their own. Your money literally starts cloning itself. Let's see how this builds over time to create a massive snowball effect. Imagine you invest $1,000 and get a 10% return in year 1. You now have $1,100. In year 2, you aren't just earning interest on your original $1,000, you're earning 10% on the full $1,100. Over decades, this compounding cycle turns modest, consistent investments into an absolute fortune.
Earning a return like 10% over the long haul is incredibly powerful, but it requires one magic ingredient: time. Time is, without a doubt, your greatest unfair advantage as an investor. The earlier you start letting compounding work, the less of your own hard-earned cash you actually have to invest. The math just does the heavy lifting for you.
Section 4. Rules for smart investing. Consider this your beginner's playbook. We've got 5 non-negotiable rules here to keep you on track.
1. Never invest cash you're going to need next month. 2. Make sure your emergency fund is fully built first. 3. Always diversify so you aren't putting all your eggs in one basket. 4. Keep your emotions in check. Successful investors stay calm when the market has a bad day. And 5. Keep learning. Financial literacy pays the highest dividends of all.
If you want the ultimate cheat sheet to internalize, it's this. Patience almost always beats panic. Consistency beats trying to perfectly time the market. And knowledge beats luck. Get this through your head, and you're immediately miles ahead of everyone who treats the stock market like a slot machine. Section 5. Mistakes to avoid so you can fiercely protect your progress. Wealth building is just as much about playing elite defense as it is about offense, right? We have to eliminate the unforced errors. The traps that wipe beginners out are things like throwing money at assets you don't understand, blindly following some social media hype, panic selling the moment things dip, or borrowing money to invest. But the biggest trap of all? Expecting overnight riches. Building real wealth takes years, not days. I literally cannot stress this enough. If an investment sounds too good to be true, it almost certainly is. There are countless scams out there promising guaranteed massive returns with zero risk. Mathematically, no way. That's impossible. Guard your hard-earned money, always do your own personal research, and never let anyone rush you into a decision.
Ultimately, finance isn't some scratch-off lottery ticket. It's the sum of your daily decisions. Your financial future isn't shaped by one lucky break. It's shaped by small, consistent choices made over a long period of time. Choosing to save today, choosing to learn today, choosing to deploy your employees wisely today. Your future is built entirely on those small choices. So, the only question left for us is this. Are you going to keep working for every single dollar you earn for the rest of your life? Or is today the day you finally hire your money to start working for you? The choice is yours. Let time work its magic.